Welcome everybody to the complete beginners course for ICT students. I made this series to help those who are just getting into trading and into ICT's concepts, to simplify it, to make it a little bit easier for all of you to learn it. So I hope this finds you well. This first video is going to go over futures trading and what it is and how to get yourself accustomed to it if you're just beginning. And the rest of the videos are going to be breaking down ICT's concepts and simplifying it for all of you. So the first slide here, introduction to futures. What is futures trading? So different markets are available for trading different assets. The stock market is for trading stocks, the forex market is for trading currencies, and the futures market is for trading futures contracts. So there's a lot of different markets out there. Specifically, we're going to be focusing on the futures market. How large is the futures market? It's estimated it's rose to about 30 billion contracts last year in 2023. How many days of the week is the futures market open? It's open 24 hours a day, nearly 6 days a week, from 6 p.m. Eastern to Sunday, 5 p.m. Eastern. So it closes on Friday at 6 p.m. Eastern, and it opens back up on Sunday at 5 p.m. Eastern. Listed below is just some major future markets. CME is the largest futures exchange in the world. How can I make money trading futures? So yes, on your own accord, if you choose to open up an account, you could profit from these markets. Of course, there's risk involved in trading, and there's no guarantee that you will profit. But can I replace my income / cover expenses? Yes, results may vary depending on the individual. Trading can be very lucrative and can be treated as a full-time income or even replacing monthly expenses. How much money do I need to start? So this depends on each broker once you get into a live platform and the minimal deposit that they require. For instance, some brokers require as little as $100 and some require a minimum deposit of a few thousand. So it depends on the broker that you choose. That's up to your own discretion and who you end up choosing as your broker. How does my initial deposit affect me? So depending on your initial deposit, your risk and profit will vary. For an example, a higher amount of deposit equals a higher amount of gains / risk. So introduction to ICT, INNERCIRCLETRADER. So for those who don't know who this is, I'm going to give a brief overview of him. So who is ICT? ICT is Michael J. Huddleston. That's his real name. Also known as INNERCIRCLETRADER. He's a public figure in the online trading community. He's been trading for over 30 years and has developed his own unique approach to trading, which he calls the inner circle trading method. His approach is contrary to the vast majority of other approaches that have been around in these markets for decades. His belief is that there is an algorithm that operates these markets, and he teaches us the language in which to understand the algorithm. So personally, I've been trading for 6 years now, and I stumbled upon ICT about 4 years ago, and he opened up my eyes to a whole new view to trading and concepts of itself. So graciously on his YouTube channel, he's created enough education to learn completely for free. You don't have to pay anybody else. You don't have to go out and seek any other course, because he's graciously put out enough information on his YouTube channel to learn about these concepts, to be able to generate income if you so do create a live account and end up wanting to pursue this full time. He's created a video on his YouTube channel where you should start. So it's titled Join the ICT Private Mentorship for Free. And in this video, he'll walk you through where you should start on his YouTube channel. That way you're off to the right step, because there's a lot of information on his page. There's a lot of videos and it can get confusing. So he will guide you where you should start. Introduction to futures platforms. So let's say you want to start analyzing these markets. You want to see what the futures market looks like. Where would you do that? So there's an amazing place, an amazing website called tradingview.com. It's a free platform where you'll be able to analyze the futures markets in addition to other markets besides futures. So as we mentioned before, stock market, foreign exchange, crypto, There's a lot of other markets out there that exist on that platform, but everything is for free. You're going to be able to analyze the markets. I would advise all of you, if you're just beginning, if you're just brand new to trading, to go to YouTube after you create an account on tradingview.com and go to YouTube and have somebody kind of walk you through how to set it up. I'm not going to do it in this video, but I think it'll be very easy for all of you if you just go on YouTube and see how to set it up for yourself. It's very straightforward, very beginner, brand new, user friendly. So once you get on that platform, you get a little bit accustomed to it. There's a thing called a ticker symbol. A ticker symbol is an abbreviation for an asset class that you choose to trade. So if you want to analyze a certain futures market, you're going to use a ticker symbol to look that up. So what futures contract should you start with? I would recommend picking one of the three listed below to start with. So NQ, otherwise known as E-mini NASDAQ, is a futures contract that you can use. That's your ticker symbol to look up in TradingView to start analyzing that market. Same goes for ES, that's the ticker symbol, otherwise known as E-mini S&P 500. YM is another one, E-mini Dow Jones. So if you want to look up any of these futures markets, you just type in NQ and you'll be able to see a drop-down menu and you'll be able to click on that asset class or that market to start analyzing it. Introduction to futures accounts. So paper trading versus demo, or /demo versus a live account. So paper trading is a virtual account that can be used to practice strategies in a live market. This is to be used in the beginning stages of your career. So a paper trading /demo account is exactly how everybody starts out. You're able to practice strategies, be able to get a feel for the market with no risk to yourself. It's completely fake money, but you're able to see in a live market how you're able to operate, the risk to reward, how much you're making, how much you could lose, etc. It's a really great place, like a training wheel, to get started in the market. So how do I start paper trading? TradingView has a featured listed below. It'll be called Trading Panel, where you can start your virtual trading account. Again, if you want to look up on YouTube after this, TradingView beginner videos, I'm sure somebody will be able to walk you through very, very easily. How do I start a live account? Just a side note, I wouldn't recommend starting a live account for at least a few months until you get accustomed, you get comfortable with the markets and with trading in itself. Then you can start to look at something like a live account. But a live account must be registered through a broker. Each broker will be different for the requirements for the minimum account. So a live account is where you're going to be making real money, and you can also lose real money. So at your own discretion and whenever you feel comfortable, if you do, you can open up a live account with one of these futures brokers listed below. So these are just one of many futures brokers out there, but these are three that I highly recommend and I've used personally. So one of them is called Tradeovate, Amp Futures, and NinjaTrader. So just write that down, keep it in your notes for a later point. Whenever you feel ready to get into a live account, then you can sign up and use one of these. Introduction to futures accounts. So what is an account balance? Account balance refers to the amount of capital deposited inside of your trading account. Your account balance will change, positive/negative, depending on the trades placed on the account. How do I place a trade? Each trading platform will be unique. For TradingView, once connected to a paper trading /live account, there will be two buttons, top left, buy or sell. For more information, you can search on YouTube how to place orders on TradingView. What's the difference between buying and selling contracts? So inside of the futures market, you can buy or sell. You have both options. If you buy a futures contract, you agree to pay a certain price on a certain date. So if you buy a contract and price goes up, you're going to be able to make money. If you sell a futures contract, you agree to provide the underlying asset at a specific price. So if you sell a futures contract and the market goes down, you can still make money. You're able to make money both ways in this market. Introduction to futures accounts. What is margin/leverage trading? Leverage trading, also known as margin trading, is a fundamental concept in futures trading that allows traders to gain exposure to larger trade position with a smaller amount of initial funds or capital. So brokers will give you margin/leverage to be able to trade more than what you have inside of your account. What is realized/unrealized profits? Unrealized profits are gains that are appreciated but not yet cashed in. Realized profits are gains that are cashed in. So let's say you buy a certain asset class and it goes up and you're up $500, but you haven't closed out of that position. That would be unrealized profits because you haven't cashed it in yet. But if you close that position, then that's called cashing it in, right? That's realized profits. What are take profits and stop losses? So these are very fundamental to a trader and how we operate inside of these markets. They're there to protect you, and they're able to help you in whatever position if you're buying or selling. So take profits are levels you can manually adjust on your position in the market where it will automatically exit your position in the desired profit. If you don't know what a position is, I maybe didn't put this in here, but a position is where if you see the market going up or down and you decide to buy or sell, it will get you at a specific price. So that will be your position. So if you sell at a certain price point, then price goes down, your position is there. So take profits, if you want to get out at a specific level, it will automatically take you out of the market at a plus or minus. So stop losses are levels you can manually adjust on your position in the market where it will automatically exit you out of your position at a desired loss. So you're able to adjust how much money you want to make, and you're also able to determine how much money you want to risk/lose even before entering into the market. Okay, they're there to help you and protect you. Introduction to futures and contracts. What is a futures contract? So a futures contract is a legally binding agreement to buy or sell a standardized asset on a specific date or during a specific month. Typically, futures contracts are traded electronically on exchanges such as the CME Group, the largest futures contract exchange in the United States. So I mentioned that in the first slide here. How do I use contracts? When placing a position, whether buying or selling, you'll be using a certain contract size depending on your account size. So this may be obviously a little confusing at first, but as you get into it, you'll be able to see what this really means with contract sizes and how to put it on, and how much you should be using. So how to calculate how many to use? You will calculate your contract size based off the asset class you're trading and the account size you have available. So it depends on your account size, how much funds you have available, and how much contracts you can put on a certain position. Each asset class is priced differently. Some are worth more or less. So having an understanding of what you're trading and the contract size you are placing. So again, there's two variables here when placing contract sizes. Depends what asset class you're trading, because some are priced more, some are priced a little bit less, and it depends on your account size on how much contracts you could put on. For an example, an account size of $10,000, if you're trading E-mini S&P, one contract would be $50 per point, and I'll get into what points are after this slide here. So this video was just to cover futures, what it is, just a brief overview of it, what TradingView is and how to utilize that. There's other platforms besides TradingView, but I highly recommend that you get onto TradingView. It's completely free. It's super user-friendly. So hopefully this video, the first slide, was able to give you a brief introduction to what futures is. The next is going to be over technicals and fundamentals, and then we'll walk our way through some other concepts. So hopefully this video suited you well, and let's get into the next video here.